Bueller, 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 here, Bueller,
Hi, Trader Tina here from ShortMeTina.com with my, can't say daily anymore, with my recap. I know it's been a while, but before we get into the song and dance, happy Monday. It's about towards the ending of June, right? We're about to hit July. The last video I did occurred sometime in May, and granted, I can take this time here to explain why I was away, but that would be taking up a lot of time and space. Just let's say, COVID hit, a lot was going on. I just felt like it wasn't necessarily the right time to be posting daily videos. When I wanted to restart, then you had the whole Black Lives Matter movement. Again, I didn't think that it was appropriate to do daily videos. And while those issues are still present and still going on, trading is what I do. And truth be told, I kind of miss doing my video recaps, and a lot has happened. So I said to myself, well, you know what? Let me just throw up a video here. I definitely can't say that the videos will be daily. I just don't think that they're effective being daily. I haven't gotten at this point like a set schedule, but for now, perhaps they'll be once a week, or I'll just say something when something needs to be said. With that said, it's super important then that you're subscribed to our YouTube channel at ShortMeTina. That way, for sure, when I upload a video, you'll get a notification, because like I said, the videos are not going to be daily anymore. I want to commit to once a week. I think that's pretty fair, but even so, I'm not saying I'm going to do that right now, but the videos are not stopping. Obviously, at some point, videos will come up, but again, perhaps I'll just do them when something needs to be said. All right. With that said, we're gonna jump into a recap. Nothing has changed. We usually start with the overall markets. Why? Because I believe you need to be, and again, everyone's different, but for me personally, I like to pay attention to what's going on with the overall markets. For the most part, is going to dictate how I should trade, or how I should position myself directionally, whether it be long or short. So again, kicking it off with the S&P 500 right now. What you're looking at is a daily chart dating back to, let's say, January of 2018. So that's about a little over 2 years worth of data. The SPY is up about 1.47% on the day. And excuse this here, this is no longer resistance. It once was resistance. That 300 to 305 area, we can now call that support. And the reason I'm going back to 2018, and if you pay attention to this red line here, which for the most part is around that 300 to 305 area, you can see for the past 2.5 years where 300 to 305 has acted more or less as either resistance or support. You can see here all throughout 2018, well into 2019, it acted as resistance, meaning once the market got to those levels, you had a subsequent sell-off. The market got to those levels, you got a sell-off. And then you had periods like here, mid-July, towards the ending of mid-2019 towards the ending of 2019, where that 300 to 305 level acted as support. Obviously, late 2019, last year, we had that huge rally here. Once we broke free of that 300 to 305 level, topped out around 339, somewhere around there in mid-February of this year. And then COVID happened, a lot happened, and then we had this huge collapse that lasted about, I would say maybe a month at that. So the market shed about 40% in a month. And here we are, we rallied off of the March's low, right? March low came in at around, let's see, 218.26, and I wrote it down. Once we topped out early June, that was about a 48%, kid you not, 48% rally off of March's low. We had a bit of a pullback the last few trading days, last few trading weeks. about to the tune of 6 to 7%. But long and behold, right, that 300, that magical area that I've been, or range that I've been talking about, that 300 to 305 level has remained. And again, we closed at 304.46. So in my opinion, right, anything can happen, but in my opinion, as long as we can more or less stay within that range, even if we're slightly below 300, slightly above 305, in my opinion, you have to be bullish. I am bullish. We are long the SPY. And I want to say something here too before I move on. I have about 8 or 9 stocks to talk about. Stocks that actually have helped our bottom line for 2020, and is the reason why we're positive year to date. I'll talk about them. One, because, well, they've helped us, they've carried us this year, one. And two, I do believe that those stocks, providing that we have this continued bull market, can go further. So to what I want to talk about with this 48% rally here. Now, if you go back and listen to maybe a few of the videos I did around this time, I wasn't the most bullish, right? I wasn't the most bullish. I say that to say I didn't catch the bottom, but nonetheless, I was still able to take gains out of the market. I was still able to participate in this rally. I didn't catch the bottom, but I was able to catch, I would say, anywhere from 17 to 24% on the upside. So you're not always going to catch the bottom, but once you see the markets going a certain way, I was able to jump on long, or we were able to jump on long. And right now, again, we are once again long the SPY. In my opinion, as long as it can stay above 300 to 305, I am bullish. What else do we have? All right, and so we have JD. It's a daily chart. It's off about 12% on the day. I've been talking about JD, especially for anyone that's followed me for quite some time, for a long time. Disclaimer, I am no longer in JD, but we've had an amazing ride with JD. But I mention it because I still think that the stock can actually go on to do great things. I'm actually looking to re-enter this trade, but at a better price point. Sitting here at $59.58, it's a little too rich for me. And I'm going to try to speed it up because, again, I spent about 6 minutes on the SPY. I have about 8 or 9 that I want to get through. I'll try to keep them at 30 seconds. Anyway, so for those who know me, you should know that I love to trade this pattern. I call it consolidation, or the range. Essentially, what I do is wait for the stock to get to support, a level in which I believe buyers are going to step in, no matter how dangerous that support level looks, and I buy. So back in 2018, when JD had this tumble from around 50 to around 18, 19, did that look scary? Of course it looked scary, but I said to my premium members, hey, look, listen, 18 to 20 is a good area to buy in my opinion. We ended up buying, and I always say you want to hold on to your winners because you don't know how far they're going to take you. Again, JD helped our bottom line, or my bottom line, tremendously this year. And again, I started to unload once we got past 50. So I unloaded some around 50, some around 55. Didn't get to unload any around 60. But again, sitting here at 59.58, I'm expecting a pullback. And once that happens, I'm actually going to initiate another position and perhaps ride JD to, somewhere north of $100. So keep your eye out on JD. I still think that this stock is quite bullish. What else? All right, and to Spotify, this stock has been such a great stock, in my opinion, for the last few trading days, few trading weeks. Another trade we took in the premium member community, I've held on to this one because, like I always say, you want to hold on to your winners. One, because they pay for your losers, and two, because you just don't know how far they're going to go. And while I have not been doing daily video recaps, once a week I still have my free watch list on our website, ShortMeTina.com. Just click on trading watch list, and I've been very vocal on my bullish nature in terms of ticker Spotify. Again, similar setup to JD, right? And I teach this setup on how to trade it in our free trading course. So if you want to take that, it's about 14 days. Head on over to our ShortMeTina.com and make sure you sign up. But Spotify, again, trading in a range and just essentially buying when the stock hits the bottom of the range. So the bottom of that range comes in at around 104, 105. Granted, we didn't get there, but we ended up going long when I felt that the stock was actually going to break out of this range around that 150, 160 area. And so we rode it all the way from the low 100s At least I did. And most recently, it was trading at 271.71. So in a few trading days, had you have held on, you would have made over 100 points or $100 for each share owned. So even if you owned about 10 shares of Spotify at the time, a few trading days ago, you'd have already made about $1,000 if my math serves me correctly. Anyway, I'm telling you about Spotify now because I still think that this is potentially a $300 stock. And so sitting here at 265.14, there's still potential upside in my opinion. So what am I seeing here, right? Stock is trading within a range. Once it IPO'd, broke free of that range May 2020. We had a slight period, another mini period of consolidation here. You can see it trading, again, in between 2 points, trading within a range, basing, broke out again, and I feel right now sitting up here, I feel we're probably going to chop around or trade within that base or range before taking the next leg up. So getting in around here, in my opinion, is a safe place of entry. This is a 300 and beyond stock in my opinion. What else? And then we have Zynga, very similar, right? I don't have any lines on here, but very similar sort of setup, right? And again, if you've been following me, you know we've been in this trade, I want to say, or when I first mentioned this to our premium members, the stock was trading at around $3. Remember, you want to hold on to your winners because you just don't know how far they're going to go. So for anyone, and don't get me wrong, I'm not trying to say that this is easy by any stretch. It's actually very difficult to do, but in time, I think it gets a lot easier. And so anyone who held on at $3, right, have been richly rewarded. FYI, I remain long. Why am I going to let go of? Granted, I have taken profits along the way, but why should I, or why would I let go of a position that continuously gives me money? It makes absolutely no sense. And the fact that it's sitting here at around 956, granted we've had some slight pullbacks, but it just continues to sort of gravitate upwards towards that 950, close to that $10 level. The minute we break over 10, I think that the stock is going to run. Where do I see Zynga? I actually see this as about a $12 stock in 2020. Keep your eye on it, and I'll still be holding. What else? Again, so now we have ticker WORK. So granted, it's off about 5% on the day. It's had a few downgrades, and I think price target of around $30. I think that this is actually a $40 and beyond stock. And so this sort of notation that you see here, I think about 2 weeks ago, I tweeted this out. So again, while I'm not doing daily recaps, I'm still very vocal on my weekly newsletter. So again, if you're not subscribed to the free newsletter, make sure that you go to ShortMeTina.com and sign up. Just drop your email address. If you don't follow me on Twitter, ensure to do that. I'm at Market Declassed. I'll probably put a notation so it can come up somewhere around here because it's spelled a little funky. It's not spelled funky, but it's just different. Market Declassed. Anyway, so this is exactly why I took this trade. Similar setup to Spot JD. I tend to trade the same setups. Why? Because I'm familiar with them, and I just, once they work, in my opinion, they work really well. So the thing about, interestingly enough, the thing about work, right, interesting play on words, is that it hasn't had that explosive move yet, in my opinion, right? So again, consolidating from September 19 to May of 20, we broke through that resistance area of around 28.29. And again, full disclaimer, it's a trade we took in the premium member community. I am still long. 3, if it can remain above 28.29, then 4, I can see a retest of that $40.07 high. In fact, I actually think that this is a $60 stock, but one step at a time. And so we've actually just been hanging around here, this highlighted area here, for quite some time. And so as long as it can stay above 28.29 and not drift too further below that, I can see this getting to $40 and beyond. Again, I think it's a $60 stock, unlike Spotify, where that explosive move has happened, unlike JD, where that explosive move has happened, unlike Zynga, where that explosive move has happened. Work, I think it's gearing up for that explosive move, providing it can stay above 28.29. Put this on your radar. What else? All right, and then you have others like Tesla. And so we've actually traded in and out of Tesla several times throughout the course of the past 2 or 3 years. Obviously, we've We've gotten it right on some, we've missed it on some. But sitting here, I actually like Tesla here. I know it probably seems rich to a lot of people, myself included, from a fundamental standpoint. But this is one of those cult stocks that, not tomorrow, but by September, October, I would not be surprised to see it sitting at around $2,000. In fact, by August, I wouldn't be surprised if the stock was sitting at $2,000, because it's one of those stocks that just has that momentum behind it. And the fact that we've actually been hanging out for the month of June, we've been hanging out around that 1,000 area, tells me that it's actually kind of winding up to make that next leg or next move higher. Now, I don't think we're going to go from 1,000 to 2,000 overnight, but I can see it, getting to 1,200 or 1,300, perhaps even 1,500 with relative ease. So definitely put Tesla on your radar. What else? All right, and then we have ticker SPCE daily chart. It's off about 0.84% on the day. You see here a quote of 1542, and so it's also consolidating here. Again, full disclosure, a trade we took in the premium member community. It actually worked out for us. But once a stock begins to consolidate at the bottom end of the range versus the top, I become a bit skeptical. It does not mean that the stock cannot do great things. It can. And one of the reasons I actually want to keep ticker SPCE around, it's because it had this huge run up late last year into early this year, right? So it went something from a low of $7 to a high of $42.49. And in my opinion, if it did it in the past, it can do it again. Hence why I actually like this trade. Hence why I think everyone should at least monitor it, because once it starts going, clearly it doesn't take long to do what it needs to do. So I like SPICE here until it shows me otherwise. What else? All right, so let's get through this really quickly. Ticker BHTG. Right? Ticker BHTG, tongue twister, up about 66% on the day, closed at 274. It's actually down slightly in after hours, about 3.65%. The last time I checked, it was around 264. So majority of the run up happened in the first hour of trading. And take note, this is actually an hourly chart, not a daily chart. Anyway. So for me, for this to look the strongest, you definitely wanted to stay above that 260, that 255, 260 area. If it can actually stay above 255, 260, perhaps you would get a bit of a pop to around $3. If it cannot stay above that 255 area, more than likely, I believe the stock is going to start to sell off. And take note that there's this gap around here to be filled in the $1. So be careful if you're long. Ticker BHTG. What else? All right, so let's wrap it up and round it out with ticker ICPT. This is actually a daily chart. Stock is off about 39% or north of 40% on the day. So huge sell-off. If anyone was long, that was definitely ouch, right? Not a good thing to wake up to see your stock gap down. Anyway, again, closed at 46.70, off about 40% on the day. It's up slightly in after hours, around 0.86%, a little shy of 1%. It's up in after hours. Anyway, if you are actually on the sidelines, right, you weren't the one that was holding this when it was trading at around $80, right, or $88. If you're actually looking at not, or rather debating whether or not to jump into this stock, in my opinion, you're actually at a relatively decent point, right? Granted, again, this chart goes back to 2017. At least that's where I want you to pay attention to. You can see here that support area of around $50 to $51 has held, with the exception of today. We had that gap down. The high was around 50. Couldn't hold that, and we ended up closing at 46.70. So for me, if I was on the sidelines looking to take a long position, I would have my eyes actually 100% zeroed in on today's low of around 44.50. If it can actually stay above that, I think it has a really good shot at getting at to 50. And if it can actually hold 50, I am pretty sure within the next few trading weeks or months, you can definitely see this get back to that $70 or $80 mark. But the first thing, in my opinion, is you wanted to hold that low of 44.50 today and not dip below that. That would be my reference point. In fact, I'd probably jump in here and use 44.50 as my risk. You always want to pay attention to risk. And if it, again, not to sound repetitive, but if it can, again, hold 44.50, I can see it at least appreciating another 6 points or so at minimum. And then the next hurdle would be for it to hold $50, that support area that has held for about 3 years. Hope that makes sense. If it doesn't, comment in the comment section, and the next time I do a video, I'll do my best to clarify a little bit more. So again, we're going to cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of that video, I want you to do I'm stumbling. Look, I haven't done it in a while. Again, if you enjoyed any portion of that video, I'd like for you to do 3 things for me. 1, as usual, comment in the comment section. It's super important. If you don't comment, I don't think anyone wants to hear this, and so I go away for days at a time. So again, comment in the comment section. Again, like this video. 2, ensure that you're subscribed to our YouTube channel at ShortMeTina. Again, cannot, due to so many obligations. My daughter, congrats to her, just graduated college. She's headed off to Howard University. Congrats to her. Like, we're just preparing for, it's just been insane. So can't commit to the daily videos, but if you subscribe at our YouTube channel, when I do a video, you will automatically be notified. That's the second thing. And the third thing, believe it or not, we're still hosting that free 14-day trading course, essentially teaching folks or telling folks a lot of the things I've learned trading the stock market for the last 20 years. It's one of the reasons why I didn't get my head cut off when the market was down 40% earlier this year. It's one of the reasons why I was able to navigate that and still be positive at this point year to date. All right. So if you want to find out some of the things that I've learned trading for the past 20 years, ensure that you are signed up for that course. Again, it's completely free of charge. All that we ask is that you provide us with an email address so we can know where to send the lessons and the videos to. All right. So if that's something that you're interested in, definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support. Happy Monday again. Thanks for listening. It's nice to be back on the mic, and hopefully I'll talk to you folks soon.